What is Mr. Logan's call then on what Jay Powell will do? What is the HSBC call on what Chairman Powell does, and particularly given the new global landscape?
Well, I think it's very easy for the Fed to be patient at the moment. You know, we've heard that from just about every Fed governor who's spoken in the course of the last few weeks. Most of them think that the policy rate is at neutral. Well, certainly even the more hawkish members think it's very close to it. Everything at the moment, slower global growth, inflation generally coming in lower than expected globally, means it's very easy to be patient. But if we get to the end of the year and growth globally is improving, the China stimulus is feeding through, the US unemployment rate is still edging lower and wage growth is still edging up, then we still think there's a chance that the Fed could raise rates, probably only once more. That's all we've got in Kevin Logan's forecast for the year ahead. But it's too soon to rule out further tightening is the way we would paint it, because it will come down to what happens on inflation.
But, Janet, what does a policy mistake look like at the moment from the Fed?
Well, the truth is we know that nearly every Fed tightening cycle ends in a recession. You know, in the last 3 or 4 decades, the only period you can find where a Fed tightening cycle didn't end in a recession was that kind of mid-1990s pause, when they cut rates in about 95, 96. They'd had a tightening cycle. The economy slowed. They were able to actually cut rates without the economy going into outright recession. So at this point, it would be, I suppose, if they raise interest rates and find themselves in a position where they have to cut them again in a remarkably short period of time. And I suppose this is, you know, one of the issues about 2020. We know in 2020, by then, the fiscal stimulus will have faded more materially and probably unemployment will be rising and the Fed could well be cutting rates. It will be on our forecasts.